Hi everybody, Adam Stern, CEO of Strata SFR. We are going to do a video post of questions we asked our audience because we feel like we have a pretty good beat about what's going on in the SFR market and particularly the build for rent market. So we asked our audience, which includes private equity firms, SFR funds, apartment REITs and funds on the demand side, and also builders and SFR portfolio owners on the supply side. And we asked them to ask us questions. So I'll answer them on this video post. If you want to read them, feel free to visit stratasfr.com and read our blog. First question we were asked more than a few times was, will the SFR market continue to grow and have strong demand in 2020? I wanted to answer that in three different segments. What's happened over the first quarter of this year, what's happening right now, and what the perception is of what will happen into the future. So for those of you who haven't really followed the publicly traded REITs in the SFR segment, rent growth has been better than expected and rent collections has been much better than expected. Invitation Homes, American Homes for Rent, and Tricon all during their quarterly earnings report reported those favorable dynamics happening right now. And the result was Invitation Home stock popped up 40%, American Homes for Rent, Tricon stock popped up 20 to 25%. So everyone thought there was going to be a big delinquency rate in Q1. Everyone thought rent growth was going to be stagnant or decrease in Q1. That hasn't been the case, which bodes well for the fundamentals of the SFR market. Let's not forget, if you look at the SFR market as opposed to other parts of the economy, no one knows whether or not people will go back to restaurants or sporting events or concerts after the restrictions are lifted. People that work and businesses that run in those industries, that's a very murky future. You look at commercial properties, retail, industrial, not industrial, but retail and commercial office. Uncertain futures, will people's behavior change in the wake of this new reality? So uncertainty pervades other segments of the real estate market, other segments of the overall economy. But in the SFR market, people are still going to need a place to live. People may not buy anymore or may not want to buy when they would before, but certainly they're still going to need a roof over their heads and they're still going to need quality places to live. And I think that's going to wash out into us seeing strong rental demand in the future. Maybe not so much positive rental growth, but at least maybe not as good as we've had rental growth in the past, but certainly still positive. So do I think that the SFR market will continue to grow? Yes, absolutely. I think that this fundamentals of the SFR market will shown in a really great way in the months to come because of people's fundamental need and desire to have this product. In addition to the fact that I think the prevailing sentiment is right now, people are moving out of population centers. We talked to 24 builders in the Southeast over the last several weeks, and most of them are reporting better than average sales for new construction properties and everywhere from North Carolina all the way down to Florida. And they've been tracking where these buyers are coming from, and an inordinate amount are coming from the Northeast and Midwest city markets like Chicago, New York, Boston. So the demand and it seems like the demographic shifts toward the Southeast, especially to people getting out of small cramped apartments and wanting to live in houses with larger living spaces. At least anecdotally, that's what I'm hearing from builders in terms of their wholesales. And certainly portfolio owners, including the big public REITs, even the ones I'm talking to, are reporting strong rental demand for single-family units and townhome units. So that's what's happened. In the future, do I think it's going to grow? It's important to remember right now there's 25 million people plus out of work. If you look at the recessions of the early 90s, late 90s, early 2000s, and you look at the unemployment numbers during each one of those recessions, the sheer number of unemployed vacillated between $2.8 million, sorry, not dollars, but 2.8 million people for the recessions of the early 80s. And that went up to like 3.5 million people for the recessions in the 90s and the 2000s. Right now, according to the numbers, there are 10 times as many people out of work. So, we've been bolstered by the economic stimulus of the government, and I don't think Q1 is a good representation of what will happen for the next several quarters. I certainly think the amount of people out of jobs, the amount of businesses that will likely falter, given the restrictions that are still in place and will remain in place, is going to have a massive effect. So will other parts of the economy show the effects of that downturn? I think absolutely. Will single-family rentals shown to be a fundamentally sound place to have investment capital flow? Will operators succeed in still renting properties? Absolutely. I think it's one of the great things about this asset class. So that's the first question. Second question is, what are the buying opportunities now for build-for-rent projects and SFR portfolios overall? So this is an interesting one because there's a big discrepancy between what buyers are looking for still and what sellers are experiencing. And I would break buyers down into two groups. Number one, buyer groups that are looking for distress. They're purely opportunistic, looking for builders and SFR portfolios that are having a hard time right now and need liquidity and need an exit. And that's one group of buyers. And the other group of buyers isn't necessarily looking for distress. They're more programmatic in the way they invest, and they see this as an opportunity to align with builders that might not have been thinking about build for rent before because the housing market was so robust, but because of the sentiment about possibly the housing market slowing down, it creates an opportunity for them to align with these builders to create build for rent products. On the other side, you have builders who build units, and they have portfolio owners that manage and operate portfolios. And I don't think as of Q1 and going into Q2, they're feeling the pain just yet. Builders are reporting strong home sales. Operators of portfolios are reporting strong rent growth and strong collections. And I don't think until those things change will you see pricing move. And I don't think the opportunistic buyers are going to find many deals just yet. They may as time moves on and if distress increases in the market, but it's not happening right now as I see it. The opportunity I see is with programmatic buyers really having an easier time of aligning with builders of build-for-rent projects where they would not even think about taking a build-for-rent project and making it, or taking a build-for-sale project and making it a build-for-rent project. But now that the market's a little more uncertain, they're really looking in that direction and thinking, I was planning on selling this product to retail homeowners, but it makes a lot of sense to align with an investor and create a programmatic approach to taking this inventory and putting it on the market as rentals in one community to an investor. And that's a huge opportunity I'm seeing right now between building firms and investors who are looking for that kind of thing. Third question is, what kind of builders are investors looking for to align with, and what kind of investors are builders looking to align with? So this is interesting. In the build for rent space, investors are looking for builders who obviously have current projects that make a lot of sense for build for rent, and that are able to offer them out at attractive enough prices where they can hit yields, and to align with builders that have the experience and the track record of delivering quality product on time and on budget. But it's not so much about having a single good project as it is having a process for creating a pipeline of projects that can feed a capital source's need to build their portfolio over time. So if you're a builder and you have one good project, but you don't really have a strong land acquisition program or a strong land development program, or even a strong fundamental workforce to create that product, an investor might look at that and say, yeah, I don't really want to spend the time and the energy to have one project bought, even if it looks good. I'd rather find a builder with a good project and an ability to create a pipeline of projects for me. And that's the kind of builder investors are generally looking for. And the kind of investors builders are looking for are investors that have a more programmatic approach to wanting to create long-term relationships with these builders. Again, most builders aren't seeing a decrease in sales volume or sales prices just yet, so they're not feeling the pain by and large. So they're looking at this as an opportunity to create a separate line of business with investors that will allow them to do a few things, including helping them fund projects, being takeouts for existing inventory, and of course being takeouts for entire projects that they can contract before the building starts and have a more assured exit at a certain price. So all those things are attributes of what builders and investors are looking for. Hope that helps. And the last question is, are there specific markets that Strata SFR is particularly excited about, and what are the attributes of those markets that investors gravitate to? So obviously we're in Charlotte, North Carolina. We have a big focus on the whole Southeast, from North Carolina down to Florida, as far west as Alabama. I think the Southeast is going to be a big benefactor of population centers in the Northeast and Midwest markets wanting to gravitate to places with still good economic fundamentals, strong job opportunities, a good quality lifestyle and quality of life attributes. The Southeast and many Southeast markets has all of that. I think that investors are going to gravitate toward sub-markets that have better fundamentals than the average in a market. Say if you look at average home price, average school scores, average amount of the workforce that has a college education. All of these points, demographic points in a market, if you look at what the median is, investors are gravitating to the areas that have better than the median attributes, right? And if builders keep doing what they're doing, which is key into these areas as a place to create buying opportunities for these funds, I think there will be more and more transactions happening in areas that are suburban markets outside of urban cores, places that are considered bedroom communities of major markets around the Southeast. And those fundamental economic drivers, those demographics, are going to be the things that drive investors to certain places. And the builders who are smart enough to find those projects are going to be the ones that win. So those are the 4 questions. Hope you enjoyed this segment. If you'd like to ask us questions, visit us on stratasfr.com. Hope you enjoyed it. Thanks a lot.